So just how much wealth are we talking about here? In today's video, I'm going to break down the basic method and the basic math behind something called the principal limit, which is a technical term for the maximum amount that you can borrow with a home equity conversion mortgage. As always, remember to check with your family and a licensed financial professional before you make this or any other major financial decision. Now sit back and get ready to learn the truth about reverse. If this is your first time here, please like this video, subscribe to the channel, and be sure to tap that bell for notifications so that you can keep learning right along with us. And if you have any questions about reverse mortgages, if you need more information, please don't hesitate to reach out. My contact information is in the description below. I'll be happy to answer any questions that you might have. Those over age 62 have amassed more than $13 trillion of home equity, and it largely sits idle during retirement. My name is Brian McCrae, and I'm here to change that mindset. Reverse mortgages aren't for everyone, but under the right circumstance, they can be an extraordinarily powerful financial tool that will help you thrive in retirement. In today's video, we're going to break down the method and the math that determines how much you can borrow with a reverse mortgage. So the first factor is home value, and the market value of the home is determined by an appraisal that occurs during the loan application process. This appraisal is specific to this loan application, and the outcome of this appraisal determines the market value of the home, the value that we will use to determine how much we will lend against. The second factor is age. The minimum age is 62, and the younger you are, the less of a percentage of the home's value that the home equity conversion mortgage will lend. And this makes sense because the younger you are, the longer the loan's going to amortize because you're going to live a little bit longer. And so because we have to account for a longer amortization period, we have to lend less upfront. And so if you're older, that loan period amortization is a lot shorter, and so we can lend more initially. The third factor that determines how much we will lend is the interest rate. If we have a loan balance that's accumulating interest at a higher interest rate, that's more interest over time. And so that means we will lend less initially when the rates are higher. And so the younger you are, the less you get. The older you are, the more you get. And the interest rate, the lower the interest rate, the more you get. And the higher the interest rate, the less you get. The market value of the home determines something called the max claim amount, which essentially represents the home's value up to a maximum of $1,149,825. That's called the max claim amount. That's determined by the home equity conversion mortgage. And that value typically changes every year. It typically creeps up between, say, 3 to 8% year over year. And so that max claim amount represents the maximum value that we will determine the principal limit against. The age and the interest rate are used to determine something called the principal limit factor, or PLF. And the PLF represents the percentage of the home's value of the max claim amount that the home equity conversion mortgage will lend. And so that overall percentage is going to be lower if you are younger and if interest rates are higher. That principal limit factor is going to be a higher percentage if you're older and or rates are a little bit lower. So right now it's May of 2024. Interest rates are between 7 and 7.5%. And we are in the middle of a pretty significant economic slowdown, and rates are as high as they've been in a couple of decades. And so this certainly affects the overall percentage that we'll lend. It's a lot lower than it was a couple of years ago. So for example, if you have a 62-year-old, and if we're using, say, 7.5% interest, a 62-year-old at 7.5%, that's going to yield a principal limit factor of about 29%, which means we're making available 29% of the home's overall value to lend. Now, if rates were, say, in the fives, that percentage is going to be more like 35, 40%. So it's a pretty significant difference as the rates change. Now, as you age, that percentage also changes. At age 72, with rates at 7.5%, that principal limit factor jumps from 29% to 35%. So pretty significant increase with just 5 years of age added. And once you hit 82, that principal limit factor jumps up again to 45%. So significant jump there once you get into your 80s. And so from an evaluation perspective, this principal limit factor, the total percentage of the home's value that we will lend, is very significant in determining the overall fit, but also the timing. So thinking about the increase in the principal limit factor from age 62 to age 82. Age 62, it's 29% at 7.5% interest rate. At age 82, it's 45%. Again, we're using 7.5% as the interest rate. And so determining the overall fit and certainly the overall timing, age plays a big factor because that's going to determine how much of the home's value we will make available to lend. If you're putting this in place at a younger age, which is the recommended strategy, especially if you have a paid off home or a very small loan balance to begin with, because we're taking full advantage of the line of credit growth over time. That means the available line of credit balance is growing at the interest rate of the note. Right now, that's about 7.5%. So simply by putting a home equity conversion mortgage in place, you're growing liquidity at 7.5% year over year. And as that compounds over time, you're looking at doubling your available line of credit every 10 years. And so from a planning perspective, you're allowing yourself to grow a significant pool of wealth that you can tap into in later retirement. Conversely, if you do have a large loan balance, it may not make sense to turn into the home equity conversion mortgage at a young age, because that loan balance is going to be accruing interest for a longer period of time. So understanding not only how much you can borrow, but how what you borrowed is going to affect the loan over time, that plays a large part in determining both the timing and also the overall fit of the home equity conversion. Looking at it down the road, if we are looking at the home equity conversion mortgage later in life, now it might make sense to transition that loan balance, even if it is a little bit of a large loan balance, because we're eliminating the monthly payments and because we're later in retirement, that loan's going to compound and amortize over a shorter period of time. So it really depends on what the overall financial goal is. We know that's going to shift as you age through retirement. So understanding the timing, understanding the percentage of the home's value that we'll make available, and also understanding your current mortgage loan balance, those things go a long way to determining not only if the reverse mortgage fits, but also the timing of when it might fit the best. So the principal limit factor, or PLF, represents the total percentage of the home's market value that the home equity conversion mortgage will lend. The principal limit then is that expressed in a dollar amount. And so, for example, if we're talking about a 72-year-old with a $500,000 house, that principal limit factor is going to be 35%, and the principal limit therefore will be $175,000. So the principal limit would represent the maximum amount that we would lend. But this does not take into consideration any closing costs that we may be rolling into the loan, also any liens or mortgages. And so this principal limit represents the gross amount. The net amount will be after you take out the closing costs, plus you take out any mortgage loans or tax liens that we're paying off. Please understand that interest rates are volatile, home values are volatile. And so if you're interested in a little bit clearer of a picture of exactly how much you can borrow in your situation, please feel free to reach out. I only need a few pieces of information. I just need the youngest age, the approximate market value of the home, or if you don't know that, the home address. And if you have a mortgage, the interest rate and the loan balance. So with those three pieces of information, I can turn around a relatively accurate model that will give you a pretty good picture of how that home equity conversion mortgage would be structured in your specific environment. So as we've seen, understanding how much you can borrow with the home equity conversion mortgage is a key component in evaluating both whether or not the home equity conversion mortgage might be a fit for you, but also the timing of that fit. And we discussed how the principal limit is determined using the market value of the home and also using your age and the current interest rates. I hope this information is helpful in both evaluating the timing of a home equity conversion mortgage and the overall fit for you. Until next time, keep on learning the truth about reverse.